Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 29th of August. All right, it's time to get you in tune with the market. What's happening now, what's happening tomorrow and this week, and then where the focus is for this month, because we have got some really good trading conditions coming up. And that's because there's a lot of pressure on the Fed to potentially, or they are creating it, to make further rate hikes. Now, next month, I think it's 80% chance of just sitting on hold, right? Waiting to see more data. But there's a 60% chance of a 25 to 50 basis point starting to be factored in for November. And that's where the economic numbers come into play, right? Changing that projection is what the numbers can do for us. So the dollar index dips, briefly hits 9-month high against the yen. Okay, so some of the news services are just highlighting things that are just happening right at the moment. Now, when I sort of look at the charts, and if I just come straight across, I'm looking at the, say, the start of a week in particular, looking at the daily charts, okay, medium to longer term charts. You can see here very clearly the dollar index is starting, well, it's already broken higher. I was going to say starting to break higher. Dollar Swiss going with it as well. Dollar yen, right? I still think up towards 150 odd before the BOJ does anything. They've gone to sleep. Dollar CAD moving topside, and you've got Euro, Sterling, Aussie, and Kiwi all heading lower, right? So very clear US dollar direction. And when we look at the bigger timeframes here for the equity markets, okay, pressure on the downside. Okay, the Dow Jones, the S&P, the NASDAQ sort of broke down, but there are some more levels below here which will trigger a bigger sort of dip to the downside. And if the Fed, right, if the numbers start to heat up again in the US, well, the projections for them to be raising rates in November will go up, equities will come off, the dollar will rally, right? So it's pretty simple format for what we're doing. Now, piece this together, right? So look at the daily trends, all right? The longer term trends are your friends, right? The old adage. Now, I look at the current long-term trends, and as I was just sort of saying, it's very clear what the US dollar is doing, right? It's going up against everything. So Euro, Sterling, Aussie, Kiwi going down, and the dollar going up against the Swiss, yen, and CAD. Now, if I come back and have a look at the hourly charts, right, you can start to see where the momentum shifts are. Now, some of these are coming back to test resistance lines, okay? Euro, Sterling, Aussie, and the Kiwi, and also dollar CAD. Well, dollar yen, not so much, but it's in that same frame of mind. Dollar Swiss and the dollar index. Now, what are we looking to do here? Well, my first thought is going with the trend. So looking to get short as these instruments come back to test these hourly trend lines, right? I'm looking for Euro, Sterling, Aussie, Kiwi to go down, and dollar CAD, dollar yen, dollar Swiss, and the dollar index to go up, right? So that's big. And why? Because going with the trend is the easiest trade. It's the path of least resistance, okay? Literally. Now, when I focus that and think, well, okay, what can I use to sort of get into the trade? Well, you may have some technical levels, you may not. But what we will have is key economic numbers that paint the picture for a strong or weak currency, right? So like looking at this week and just piecing it together, right? The first week of each month, right? First Friday is non-farm payrolls Friday. It's a wham bam, really kicks the market into gear. But in this framework with the Fed, right? Sure, employment is important, but the inflation numbers are the key thing. And we've got like another week and a half or 2 weeks from now before that comes out. So let's not get ahead of ourselves. Let's just look for where we may see some good trading opportunities. Now, German data, right? The euro is trading down. Short term, it's coming back to resistance. This could provide us with an opportunity to get into a trade here on euro. The JOLTS job openings, well, that's like a third tier employment number. But as we know, the employment numbers out of the US, even these second, third, even fourth tier numbers can come into play. So worth looking at. But if you have a look at the scope of this week, okay, today we've got GfK consumer confidence numbers, the JOLTS job openings. Wednesday, we've got German inflation numbers, right? That's the key to Europe is Germany. And then you come into Thursday and Friday. This is where you're going to have your hands full, right? Because it's battle stations. Strap yourself in, because we do have the core PCE price index, a very highly regarded and respected inflation number that the Fed watches very closely. You got personal income and spending in the US. And then on Friday, obviously, we've got the non-farm payrolls and ISM manufacturing numbers. So we should know a lot more about what the US dollar is doing by the end of this week. Okay. And we may get a little kicker involved here with these peripheral numbers, like the numbers that aren't US numbers, right? So manufacturing PMI numbers, important for the Aussie and Kiwi. German numbers, important for Euro and Euro crosses. And then you have GDP numbers there out of Canada. And once again, the Caxton manufacturing numbers out of China, important for the Aussie and Kiwi. So you've got these other influencing factors, but the US numbers are the key to the big picture, especially for global equity markets. So that's where we are right now. And you think, right, okay, so we've got long-term trends in play. We've got short-term support and resistance levels to use. Okay, you don't need much more than that. You're just going to need to be patient and wait for the opportunities. Now, just as you do that, just if you scroll down here, right, and well, there's two things here. First of all, just follow this week. Then you come into and you're sort of like trying to piece together where the big moves may come from. Then you've got the second week, right? RBA interest rate decision, no change expected. And you go through Monday to Friday here. Canadian employment numbers, okay, pretty important for the CAD and the Ivy PMI numbers. Aussie GDP, RBA. So look, the Aussie dollar is going to be important next week. Canadian, but see how here next week, there's very few US numbers, right? So the US dollar is going to get all of its direction pretty much from this week, right? So if you look at that next week, very light on. ISM services numbers, the only one sort of really there, or they call it the non-manufacturing PMI. And then you come into the following week. So this week, heavy US numbers, next week, light. And then it comes into pure US dollar. You've got the inflation numbers there the following Wednesday, right? So that gives us the final answer, right? So let me just show you one other thing. So when it comes down to looking at the markets on a weekly perspective, right? I've got this set up. Let me just get my pen. 3 stars, right? They're really high impacting numbers. Okay, so I've got high impacting, but if I go in here and say include the second tier numbers or third tier numbers as well, you'll see that the calendar is actually chock-a-block, right? There's a huge amount of bits and pieces coming out here that could impact. And to me, like the S&P Case-Shiller home price numbers has always been a very strong impacting number on the markets. But you know what? For whatever reason, that doesn't come up. But the JOLTS job opening. So make sure you check not just the top tier numbers that some of these calendars have, but also the second tier. You could even go to like the really low impacting numbers, and then you'll find the calendars are huge, right? Massive. So to make it a little bit easier for the presentation purposes, I usually go to the top tier, but probably going back just one will give you all the little numbers that fill in the gaps, right? That form the foundations for a lot of these, the economic backdrops for these countries. So as you can see, like Wednesday, yeah, there's a huge amount of data coming out, right? Now, don't sit in front of the screen and just watch and hope that these numbers come out randomly different, right? The high impacting ones are the ones that we only need a small amount of variance to get the markets moving. And that's why we look at those ones a little bit closer, right? So small variance on these numbers, okay, you get a bigger move. And that's why the market and the bankers focus on that stuff very closely. All right. So this week, as I was just saying, just to summarize, we've got Thursday and Friday, your big days as far as economic numbers go. Doesn't mean you can't get good moves out of the other days, but you need something to happen, right? Focus on the daily trends, look at the overall riding trend, and then start to fit in the shorter time frame, the hourly charts for where you could potentially get into those longer term trends off the short term time frames. And that's pretty much it, guys. There's, as I said, start of a new month. There's been a lot of talk, a lot of hype about the Fed moving back to a hawkish stance, which Jerome Powell did on late Friday, Saturday morning. Okay, nothing else out of the Jackson Hole Symposium. As I said, it's a massive junket. They get great wine, good food. They sit around patting each other on the back, and that's about it, right? Massive spend for these countries. But you know what? If you got the top job, I'd be probably doing the same thing. Just following the trail of the markets, right? Daily change here. Equity futures up. Now, that's going to have a positive impact on Asia Pacific equities and European equities. You can see very clearly here a risk-on profile on the currencies, okay, with a couple of currencies out of tune, but Euro, Sterling, Aussie, Kiwi going up. To me, that's a confidence builder. I like the look of that. And then, of course, if you start to see specific things happening, like Kiwi, a sea of red, same with CAD, well, go and explore what the hell's going on. Why is that happening? And you can usually find the answer. That's pretty much the Canadian benchmark yields have slipped. That's probably why the Canadian dollar is not going so well against most of these other countries. But that's it, guys. As I said, any other questions, send me a message. Happy to help out. But this is sort of exciting, right? The start of a new month, put a line through last month, and let's start to focus in on the key numbers, because that's where we're going to see things flip. This week, non-farm payrolls, not the best trading opportunity, but it will tell us a lot about what's going on behind the scenes. We've got a week and a half or 2 weeks to wait for the CPI numbers. That's going to seem like an eternity, right? So make sure you're patient, disciplined, and controlled. You want to make sure you've got enough capital to hit these big opportunities when they come up. All right, guys, good luck. All the best. Cheerio.